Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It's Teaching Tech Tuesday. Let's talk about some dip buying principles, what to look for, what to watch out for, what to think about. I will conservatively say that today, after we hit an all-time high, I don't think many people were expecting an immediate 10% down day rip. Many people caught off guard on that. And I will be blunt about the meme coins and the dumb money. Most people there probably lost their shirt a little bit if they were trading on high leverage. If they were late longers, I mean, hey, there's dumb money in all markets, but that type of activity tends to represent the not the best of us, let's just say. I mean, it's retail, it's casino, it is what it is. It's not what you make, it's what you keep. So keep that in mind. And the last thing you want to be is a forced seller on a day like today. You want to be able to take advantage, right? You want to be greedy when others are fearful. And the question always is, for crypto, who is being fearful here and why? Who is the sellers? Who could they possibly be? You've probably heard me say whales are bad. Whales are bad for this specific reason. Any concentration in a market tends to eventually lead to that concentrated party controlling price at some point, right? Because you hit somebody's number, 69, 100, 333, a million, whatever it is, and that tends to act as a significant headwind for price. And it's very hard to predict or know when exactly that's going to happen, right? Everybody's number is their number. It's not generally broadcast to the world, although the market zeitgeist as a whole might have a number, right? Typically that's round numbers. In Bitcoin's case, it would be six figures here, etc. But let's look at, who could this possibly be selling today? We won't know for a couple hours, but in this little time capsule of video, one of the reasons I've talked about the flows so much is because this is clearly dictating price, okay? So today, potentially, we have very large outflows potentially from GBTC. I don't know why. I think the Genesis Gemini settlement selling is about done, but it's something to watch for and to think about, because the money coming into these products for the past couple months most likely isn't already taking profit. Most likely. No guarantee there, right? But something to think about. When you're thinking about, do I want to buy the dip here? Is it really over? Is this it? Is that all we're going to see? It's pre-halving. I should go all cash, right? You definitely have to check the emotions. I mean, it helps that I've been here for a few cycles. I'm not saying we're going to go to 80K tomorrow. I'm just saying there's a pretty high likelihood that we're going to do okay for the rest of the year, regardless of a day like today. Eric Balchunas sharing with us record volumes again. This is what you want to see. You want to see headlines. You want to see emotion. People want to feel something. They go on a roller coaster ride for a reason, okay? People love the volatility. We are in the news all the time. Not only did we hit an all-time high today, but we're setting volume records on the ETFs. We're setting volume records on BitO and BitX, which are the futures products and the leveraged futures products. And that's what you want. Just make as much ruckus as you can, and that gets attention. Look at NFTs, look at meme coins, right? If somebody on TikTok hears about some story about somebody making 13 million on Bonk, that's going to draw some attention, right? So just from a sentiment and psychology perspective, there will be a ton of headlines tomorrow. There will be a ton of TradFi bros dunking on us. I'm sure Bianco's going to get out there with his tweet storm talking about how all this is speculation and ETFs are bad. Okay, I'm sure that's all coming. Love it. Bring it all. That's part of the game. And the worst thing you ever want to see is price just dying in silence. Zcash is my favorite punching bag. No one's heard of Zcash in years, right? Realistically, this is not that, right? This is some crazy reversal at all-time highs. So who else is selling? Well, whales are by default miners. Miners are natural sellers. For the most part, we assume coins that haven't moved in 10 years are lost. That is not necessarily true or the case at all. So it's always something to keep in mind. Some of these early miners, which apparently maybe is what happened today, for whatever reason, decided to sell, right? We hit their number. Massive trade for them. I don't know how many millions they made on this. And it's never one thing, right? I'll get to this in a second, but There are always signs. Go watch yesterday's video. The first 3 minutes, I'm talking about some warning signs, okay? Like there are always signs for potential dip stuff and signs to be careful. So good on this miner for selling. I don't know why they sold here, but good for them. Now we can look at the on-chain analytics for this. We can look at the original metric was called coin days destroyed. So if you hold one coin for a year, that's 365 days. If you move it on the 365th day, you will trigger a 365 days destroyed. Okay. So typically we see in any bull run, days destroyed perks up significantly, right? Because you are hitting the market's price, their sell price, as a group collectively over and over, more and more. We're not quite there yet in current prices, but much like we're seeing on any other chain that's at all-time highs or near all-time highs, people who have been holding this entire time for years, who missed their first chance to sell, psychologically are thinking, I've held this long, I can't keep holding. This is enough. This is good enough for me, right? And this isn't to say that miner has more coins, I'm sure they do, but this is part of what goes through someone's head when they're back at break even, being down for so long and missing that opportunity. So on a big down day like today, I certainly would rather see something like this if we look at the raw data. Not a giant spike today just yet. I don't even know if we have the full data for today, but historically the biggest spikes have been miners, have been long-term holders. Those are generally people who don't move coins, right? And any price spasm to the highs or to the lows is generally because of a whale selling on any chain, right? ETH, I've seen on the way up, ETH specifically, you've got just everybody searching the couch cushions. Everybody's got a few million ETH for sale, right? It just seems every day someone is selling ETH. And that helped keep ETH price down for a long time. Eventually the sellers run out and demand takes over, right? Another way to look at this long-term holder supply, again, you can see the long-term holders unhodl, right, as the prices are hit, or there's some crazy price dip. But we are just starting to unlock the long-term holder supply and likely have a ways to go here post-halving. Hodl waves, I've talked about this one before, but again, there's this slice up here, right? This 10-year slice, okay? Not to be ignored. They haven't moved in a while, but when they move, you know, because mining Bitcoin in 2010, those mining rewards were massive relative to what they are today, obviously. Once again, you can see the unhodlers here, right, in each spike. So we're not there yet. I wish they'd add halvings to this and you'd see what that looks relative to halving. But typically we do not see price just stalling here at all-time highs over the next few weeks pre-halving, right? Some people are going to say, oh, this is the pre-halving scare I waited for. Oh, I'm bearish. I want another 10%. Okay, that's fine. That's not what we've seen historically, but that's perfectly reasonable to try and wait for that, I guess. If we look at the forward performance of the worst day each year, what you'll notice on aggregate, buying the worst day is a pretty good deal. Bitcoin is on sale, as they say. Now, realistically, these were prices today that weren't seen since, I don't know, Saturday. So for some people, they're going to ignore this price. But looking at even the forward performance from 2023, which was in August, I believe, 2023, or July, something like that. 6 months later, we're up 90% almost. Historically, we do quite well after days that are heavily negative. On average, you can see we're averaging around negative 17% on our worst days, probably closer to 13, 14-ish percent, taking out the outliers here. So it could get worse, and it was worse at some point today. I think it was down around 10%. But using cold logic like this might help you on the next worst day of the year figure out what to do. Looking at from Ecoinometrics, the highest and worst days each year, most of the worst returns are kind of clustered around 10%-ish. Since 2013, that's improved quite a bit. You can see 2013, it was actually pretty tame compared to historically what we've seen. So the markets are tightening up over the years, certainly, and we may not see 10% down days like we have historically. I don't know. But it's hard for me not to be a buyer when we see days like today. Now, we also had, of course, which is what most people care about, unfortunately. I was talking about beta, and everybody wants to load up on beta. They want the riskiest of the risky. They want 100x gambling. I poo-poo it a lot. I know people make a lot of money. I'm happy for them. But when this stuff starts to bubble up into Bloomberg, okay, it's usually a sign that we're getting a little overheated. CNBC, these are great clips to watch, by the way. When the ultra risky stuff bubbles up because it's up in price so much, usually that's a sign to be careful. At the very least, you do not want to be opening positions typically when we see headlines like that, because you will end up being part of the dip. Okay. Now, we also saw a jump in Coinbase activity, buying crypto activity in Google Trends. So retail is coming. It's certainly not peaked, but they're coming. And historically, again, if we look at the meme coins, this is from March 3rd, a snapshot. Weekly percent moves are all exactly what you'd expect, right? Kind of the trash of the trash. Bitcoin Gold was up 53%. So it's much easier to see this in hindsight, right? But there are always going to be signs that the forest is dry, very dry. It's been dry for a little while, right? Let's look at funding. Here's a great visual for the forest fire that just occurred. There was no management. Forestry was not in control here, sweeping with their rakes, as Trump would say. The leaves were very dry. It hadn't rained in a while. All it took was the match from that miner, potentially, maybe a whale on GBTC, maybe a few others. And all of a sudden we have a uncontrollable wildfire, and we've got, $1 billion in liquidations on the day. Dumb money is completely gone, wiped out on several accounts. Thanks for playing. And funding is starting to reset. This adds to confidence that, yeah, we're cooling down a little bit. Okay, good. Here's the liquidation stuff from CoinGlass again. Over 700 million longs liquidated in the prior 12 hours. So there are reasons why price is falling, right? These are bodies getting carried off of the dance floor, right? Something I'd want to see is for funding to cool off a little bit more, and it may continue to cool off as people start to get off their leverage addiction for a minute, only to return in a week or two. But this is what you want to see happen. You want to see OI come down significantly. This is open interest. This is a measure of how much leverage is sort of built up in the ecosystem, right? So all of that is slowly coming out here. Great on Bitcoin, on Ethereum, very fast wipe. There wasn't a whale from 2010 that sold on ETH. Why did ETH sell off? Well, the forest floor was dry, and boom, right? Bear moves like this tend to correlate, and you tend to see the biggest reaction in altcoins. So tons of open interest wiped out there. On Ethereum, Solana, same thing. A lot of open interest. A massive move down on Solana. Solana, by the way, has had its own issues with whales sitting on price, FTX sitting on price, Galaxy sitting on price. Take your coins off exchanges, not your keys, not your coins, etc. Something else to just watch and remember in the periphery is seasonality. March generally not great for Bitcoin. Q2 generally better. Coming into tax season-ish for Americans. So if I'm buying the dip, I just want to be aware, right, what's going on broadly. Nothing's perfect. Nothing's ever going to be perfect. But general lay of the land. We're still quite overheated relative to the 20-week moving average. A lot of people waiting for that. Well, they're probably going to keep waiting because look at 2019, look at 2021. We haven't hit the 20-week moving average in a bull market period in quite some time on a complete retrace, right? Now, if this is a multi-year trend, which it already arguably has been, we will likely eventually retrace to the 20-week moving average, but we're going to have to slow down a little bit first so that the 20-week can catch up, much like it did in mid-2023. The rest of this is pretty much a judgment call on lower time frames, because much like never hitting the 20-week, my barometer is always going to be the daily cloud, specifically the daily Kijun, this red line. I always feel better when we retrace to that line for a dip buying opportunity. That's at 54 right now, so that's even significantly lower than current price. Now, I had said previously, look, if you're completely out of the market, your options are DCA, your options are bids on the blue line here, the Tenkin, and bids on the red line, the Kijun. Well, today, those bids in the blue line got hit. They were filled. So that's one way to pre-buy the dip, is just have those resting orders set there. It's Taco Tuesday. It's a great day for dip. It's an exciting day to be buying the dip. Now, this is where the subjectivity comes in. You sort of have to know, what is the speed of the market here? What's going on? Is the market moving super fast? Is it worth looking at the 4 hour, the 8 hour, the 2 hour, the 1 hour? Most people don't trade how I trade. Most people trade on lower time frames. I get it. I prefer the higher time frames. This is definitely curve fitting. Let's be clear. Like, it hit some 8 hour 50% level. Was I watching this? Not necessarily, but something you could do going forward is understand that the market is moving rather quickly. And if you're looking for a common place for a 50% mean reversion, right, you're going to find it on the Kijun, the red line, which was at around 60K there. On the 4 hour, same thing, 60K. What you always want to see is your bids get filled and immediately back into the range, right? Which could be what we're seeing today potentially, but no guarantees. One thing you'll notice, the lower you go here, that 50% mean reversion turns into the cloud, which turns into, an even lower time frame full cloud reset. So the key here isn't always trying to be perfect. It's just trying not to be stupid. Okay, let's be clear. You don't want to be the dumb money. You want to be laughing on the sidelines at the dumb money when they're no longer here. I mean, that's just the way it is. One other thing you can do, depending on the speed of the market, again, move to an appropriate time frame. This was our breakout. We came all the way back to that breakout. This is volume profile at price. And generally, if we're going to retrace to an area, there's probably some sort of volume cluster at that level, point of control, whatever you want to think of that as. Certainly a very useful tool if I had to blindly pick some level, right? 62 happened to be where we stopped this time. Again, I don't think anybody thought, hey, we're going to automatically tap the all-time high and then sell off 10% on the day. But it's something to consider on the way down when you're seeing lack of support into a bigger support at 62. And then lastly, on ultra low time frames, doesn't matter what it is. Here's a cluster of things you want to see. I love seeing massive red days, okay, if I'm buying the dip. I love seeing volume, emotion, capitulation, washout, people going on Twitter saying, all right, I'm done trading, right? Throwing up their hands, or I blew up an account. We want to see news stories, people on Reddit crying. Like, look, that's just what we see. We also want to see bullish divergences on the chart. I don't know if this is going to be the bottom, doesn't matter, but this is the type of thing you want to look for. Lower lows in price, higher lows in RSI, massive volume. There's a dragonfly candlestick here on the 5 minute. I'd much rather see this type of thing on the higher time frames to be sure, but these are all the same things you want to look for. Chart patterns, Adam and Eve, W double bottom, inverted head and shoulders, all good news. So typically whales help cause the dip. Market structure is primed for a move lower, almost always fueled by the tinder that is high leverage and dumb money. Historically, the worst days are the best days to buy, at least for Bitcoin. It might be different for SHIB, okay? But generally you want to be a buyer on the worst days. That's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading. We're almost at 33K subscribers. If you're not subscribed yet, help me out. Make my dream come true. And happy trading.